Warning. You are about to enter the American sector.
Gordon, Liddy.
Booster. Go. Retro.
Go.
Rhino.
Go fly.
Guidance.
Guidance go.
Ecom.
We'll go fly.
Telview.
Go.
Control.
Go fly.
Inco.
We are go.
Network.
Go.
Recovery.
Go.
Capcom.
We're go fly.
Launch control. This is the G-Man. We are go for launch. And it is I, G. Gordon. All right, ladies and gentlemen, the big headline on today's edition of the Wall Street Journal: gold vaults to new high. Bears turn bullish as metal settles at $1,306.60 per troy ounce amid global economic worries. And this huge article here about gold. And joining me now is the CEO, the Chief Executive Officer of Rosland Capital, which is an investment company whose primary focus is investment in gold. And full disclosure, it is where I get my advice on gold and where I buy my gold. Mr. Aleksov, thanks so much for joining us. I know you, on a day like this, you must be very, very busy.
Oh, thank you for having me. Yes, when it comes to gold, this is it.
Now, I'll tell you, there's been a series of, and I saved them, I put them aside. Wall Street Journal saying another high for gold. Here's another record session for gold. It just keeps going up, up, up. What, in your view, is the reason for this phenomenal rise?
Well, it's the Fed's going to resume quantitative easing. I think that's out there, and it looks like it's going to be happening pretty soon. And at some point, you can't print so much. You can't just keep printing money over and over again, and people are not going to notice it. At some point, they're going to lose confidence in U.S. dollars. And there's an article yesterday from the former Chinese finance minister that says, hey, the dollar's, is getting toward Armageddon levels. So people are going to start protecting themselves. It's very uncertain. We don't know what's going to happen with the taxes next year. We don't know what's going to happen with the market. So people are protecting themselves, but it's a global thing. So prices are going to move. And relative to, if you look back to the 80s, relative to inflation, it's still very, very cheap.
Well, yes. You've got to look at it in terms of what in just the past 10 years, the paper dollar has lost, 20-some-odd% of its purchasing power.
Right, and we're going back to, eventually, if we have a global devaluation going on in currencies. And at some point, I think it's not far-fetched to say we're going to get back to the gold standard globally. I think that's the only way out, ultimately, because, the paper's not going to be worth anything. And I think everyone's seeing that down the line. There's a lot of economists out there that are saying, hey, 3 to 4 years, you're going to have a real run towards gold. That the debt levels that we have today are not going to really affect us until years down the road. And when they do, watch out.
Oh, boy. Well, now, there's another Wall Street Journal piece that says that silver looks likely to keep its luster. That's the way they put it here.
Well, silver is, yes, it's very, it's below its all-time high. Let's remember how it got to $55 back in the days. And it was manipulated by the Hunt brothers. I don't know if you remember that.
Yes, I do.
Yeah, so I like silver a lot as well. I think that every portfolio should have some silver in there. And I think $34, $35 over the next year or two is very feasible. It's just that the all-time high situation, if you count that as a real all-time high, which a lot of people do, yes, it has a long way to go. But they're going to go hand in hand. And if gold goes up, and silver is going to go up with it. But remember, silver is also widely used in industrial metals. It's more susceptible to economical movements. Like, for instance, China's booming right now. Mm-hmm. If China should slow down, I think gold will still be fine due to the fact that at that point, let's say you have inflation in China, people are running for protection, they're going to run for gold. And silver, platinum, palladium, which is industrial usage, will probably slow down at that point. And that's an argument that's been made as well. So it's good to diversify, but I would focus mostly on gold.
Oh, I certainly agree with you on that.
And also another reason is that gold and silver gets bulky when you do physical in large amounts.
Yeah.
Even $10,000 starts becoming heavy. So most people don't want to deal with the weight. So gold will get more of the money.
Well, now it's saying here, and they're reporting here that people who had previously been bearish on gold have just switched over to becoming bullish on gold, meaning they're expecting it to go higher and higher. They're calling for, it says here, they're calling for further gains of 25% or so over the next 2 years. Is that, do you think, practical?
I mean, at this point, I think gold, when it broke 1,300 the way they did, and they're talking $1,400, $1,500 by end of the year, yes. The problem we have here is that the U.S. economy right now, with Bernanke in the helm, people just don't think that they know where we're going. It's uncharted territories. It's very uncertain. And you have a situation where Europe now is in problems again. I mean, they're kicking the can down the road, so to speak, but they're going to have problems as well. And again, they're going to keep printing money, bailout, bailout, bailout. And eventually, if the dollars and all currencies are worth nothing, yes, gold should go up. I mean, $1,500, $2,000 an ounce 3 years ago sounded ridiculous. Now it's like, hey, it's around the corner. Yeah. It goes fast, and it's not about making $1 million. I mean, people are not doing this to make money and sell it, because where are you going to go with the money? Yeah. It's about protecting whatever you have, and you should have 20% of your money in gold right now.
Yeah, they're trying to preserve their
they want to preserve their wealth. I remember the article. I read a great thing yesterday. It says, gold is a great way to preserve what you have, but you shouldn't buy gold to make yourself rich. That's not the point. It's there to protect what you already have. And if you make money along the way, great. As long as you don't lose, that's the primary objective.
Yes, well, yeah. Now, this business of possibly going back on a gold standard, is there enough gold in existence to be able to do that?
Not even close. So that's another thing. I mean, is gold? They're talking about gold maybe being sort of a. If you look at all the spider funds and all the ETFs and ETNs out there, do they really have the gold to back it up? A lot of people say no, they don't. And this is something that eventually is going to come out, because despite the trust fund and these ETFs, they should have every dollar they have, they should have it backed by gold. If they don't, they have to go and get it. Gold will soar at that price. That's why we feel that excuse me, that physical metal is the better way to go, because there's so many unknowns ahead of us. We know gold's going up, but if something that this should materialize as well, physical gold would soar.
Yeah, so in other words, the way to do it best and the safest way is to buy the gold and take physical possession of the gold yourself.
Right, because these ETFs, they put a lot of money in it, like the Pulsum fund and stuff, but they can just get out real fast too. And that's not fair to everyone else if they don't back it by gold. So I think there's Congress has looked into this, and I think eventually they're going to have to do an accounting here. I mean, I don't know how, but there must be a way to verify if they do have the gold to back up the price of their ETF.
Yeah, well, I've stayed away from things like that. I've just gotten, the
I mean, that's legalized gambling, basically.
Well, yeah, true enough. And right now, I'm not in the mood to gamble with what pitiful amount of money I get from working here at Radio America. Dear. Now, what's the situation in Europe? I know Germany was strong and did the best it could for Greece and what have you. But, you've got Spain, you've got Portugal, you've got... what's going to happen?
Look, I've been in Europe a lot in my life, and the problem there is when you get used to a nanny situation like they are, where you demand and you expect retirement at the age of 55 or 60. You expect full medical. You expect, the unions dominate. No one really works. If you look at Greece and the situation they're in, they made it themselves, but there's no way out of it. Default, in my opinion, is their only option. The $1 trillion in stimulus is basically kicking the can down the road. The sacrifice these countries have to make, it's astronomical in their eyes. It just can't. Are you going to suspend the pensions? You can't. They're just going to riot. Spain's about to lose its AAA with Moody's. That's going to happen. Ireland is talking about huge financial problems again. Germany's confidence is dropping. And Germany, I feel sorry for, because they're stuck bailing everyone out. So at some point, Greece and these countries are going to have to split away from the EU, because you can't sit there and take advantage of Germany. They expect Germany to bail them out like they owe them. Yeah. That's why the European Union, the whole thing turns out, we'll see that. The jury's out on this.
Well, do you think
we'll see if it's a successful thing or not.
Do you think the European Union is in danger of becoming unraveled?
I think eventually it is.
And the euro will go the way of all flesh?
I guess so. It doesn't take long. Everyone's going to go back to their currencies. But I think it'll be gradually. You'll have one country, Greece will probably split, and then another country will split, because if it doesn't work, it doesn't work.
I've heard some German people, business people, lamenting the fact that they don't have the Deutschmark.
Of course. Look, Sweden is one of the countries that retain their own currency. They're in the EU, but they have their own currency. I think if you look at it,
the krona.
Yeah, the krona. Norway. So you have a situation here where Germany, they're going to get out of this. They're going to do well, but they're going to be burdened by all these other countries that are in the EU that cannot do any fiscal conservative. They cannot balance their checkbook, and they're basically going to spend more than they make. In Greece, half of the country is employed by the government.
Yeah, well, I think that's about what we're
yeah,
they
sleep.
Here.
If you go there between 1 and 3, they sleep. It's siesta time. Then you have full pension, full medical, and if you get pregnant, your wife gets 12 months paid, because she had a child, and then the dad gets 12 months, and then you have 6 to 8 weeks paid vacation every summer.
Oh, my. Marin, we need to take a break for some commercial messages. Can you hold on for us? Okay. I'm speaking with Marin Aleksov, who's the Chief Executive Officer of Rosland Capital. They are a investment company whose primary focus is investment in gold. We'll be right back after these words.
Miss an interview? Follow the G-Man for his latest interviews on Twitter today. G. Gordon Liddy, all one word, on Twitter.com. This is the G. Gordon Liddy Show.